Yes, sir. You already know this your boy B Hayes. We back with another one. Let's go ahead and get right into it. You know we don't like to waste nobody time. Today we're gonna be touching bases on Sundial growers. That's ticker symbol SNDL. Well, I talked about this a lot in the past previous videos. Keep giving y'all updates and predictions. But this is a nice video. I'm happy to share this one with y'all because I'm down a lot. I'm down a whole lot in Sundial growers. But I'm ready to be transparent and show y'all my up days as well as my down days. And you feel me? That's what it's all about. But you want to smile in your down days just as much as you smiling on your up days, because you know things happen in the market, and it's not a loss until you sell it for that loss. So I'm holding Sundial. I believe in the marijuana sector, even if it take a while for it to pull back, which I think it's already recovering very, very quickly, and that's what I anticipated on. But even if it take a little while, I mean, I done put myself in that position. I'm okay to even add more if it keep falling. If it fall, we're gonna talk more about it on the chart. But if it keep falling below that $2 range, it looked like it got a nice solid support around when it dropped. It dropped down into the 180s, the 170s. But we knew it was going to do that because it had to shake the tree even harder because it had a nice support at that $2 range. So let's go ahead and look into it though, y'all. We'll talk more about the graph when we get to the chart. So let's look at the stats. It opened up at 193. It hit a high of $2.30. The low is $1.78. The 52K week high was $3.04. What in really is almost $4. The 52K week high was $3.90. I don't know, the system must ain't calculate that in, but it hit that in pre-market right before it crashed all the way down to that 178 today. The 52K week low was 13 cents. So let's go ahead and, we like to check out the headlines, check out the news, see what they got, see what they saying, see how they feeling about Sundial as well. So this what this article say. Would you want to invest in a stock that lost around 72% of its value since its market debut? Probably not, but hear me out. What if I told you that the same stock grew by more than 475% over the last 3 months? Such is the case for the marijuana company Sundial Growers, ticker symbol SNDL, between its less than admirable performance since it went public in 2019 and its wild run up in the last few months, driven by retail investor mania. It's easy to see how shareholders could get whiplash. So which way is Sundial going? To the moon or back down to earth? So let's talk about some. They basically just asking the question, what do y'all think Sundial is going, to the moon or back down to earth? And my opinion, I think it's just it went off. The weed sector took off way too fast, way too rapidly. The market had to have a strong pullback correction, and when it pulled back from a run like that, it wasn't going to be no little pullback. It had to be a major pullback. But because the market is reverse psychology. It's not going to reward you. It's not going to reward people. 90% of people lose in the market. 90% of traders, 90%. So it's not going to reward you with easy money, with easy gains. Like, you're going to have to work for what you earn, Ty John. You're going to have to, you're going to have to work for it. Like, it's not going to, so many people anticipating it was going up so easily. So many people anticipating on it going up that it had to pull back hard to scare all the new investors out, the beginners, it don't believe in getting nobody no easy money. You gotta pay market tuition. You're gonna have losses. So anyways, let's get right into it though, y'all. Let's talk about what's the good in Sundial Growers. Let's talk about the good. So we do peak that prior to the run up, with this thing running up so extremely like that. That's just like with GameStop. How the Wall Street bets, the Reddit traders, they all piled in on these stocks to make them run. And once this stock ran up, unlike GameStop, they took advantage. Sundial Grower CEO, he took advantage of this opportunity and built capital, raised money when his stock price was higher than 4 or 5 times higher than normal. He took advantage of the opportunity. And then is also he took advantage of that, right? And he's like working to grow his company even more off that momentum. So check this out. They also being told y'all back in December 2020, they reached a debt-free status. They debt-free. So all the money they earn from any offerings, they can do an offering at any time. That money they earn, any money they pull in, they can use all that money for promotion, the growth of their business, the scale up. You get what I'm saying? The expand. Like, it's a lot of good factors in the Sundial grower as well. Don't let this huge pullback scare you off, because that's what the market gonna tend to do. That's why in every video, the stocks that I call out for y'all, I tell y'all to patiently wait. Just because the stock, like, oh, that stock about to go off, he just called it. Sometimes you're not even gonna be able to get in because you done missed the opportunity, because I wanted you to be safe. I told you to wait on a pullback, and sometimes you might not never see that pullback. It might just run straight up, but it's going to be another opportunity. So don't worry about it. Just wait on that pullback, especially with y'all account values being under 25K. When you're under 25K, you only can day trade 3 times a week. Day trade is getting in and out of a stock in the same day. See, when you over 25K, you can day trade as many times you want, but with more money comes more responsibility. The less money you have, the less risk you have in the market. The more money you have, the more risk you have in the market. So be fine and be content with playing with your small amount. I know you probably only be able to buy, some of you only be able to buy 10 shares, 1 share, 100 shares, and you want more, like 1,000, 2,000, but you don't. Your knowledge not there yet. Focus and build off these plays I'm giving you with the small amount of coins you have, until you can get to the big amount. Because, like, for instance, I got 40 bucks in one of my small accounts, that my Robinhood account, where I moved all my money from to Webull. I just kept a few bucks in there. I had 79 shares of, I still got it, of Sundial Growers at 63 cents. That's 40 bucks. Because I always sell out when I sell out my positions, I always keep a few shares just in case they go crazy. Like, they house money. So I just always keep a few shares. That's a tip. And so off that 40 bucks, on when Sundial Growers at its peak, at its top, I was up $250 off 40 bucks. So that's just to show y'all the power of small amounts of money. And if Sundial Grower reached $18 a share, I'd be up probably like $1,500, $1,400 off 40 bucks. You get what I'm saying? So don't matter the amount and the size, do good, practice make perfect. Come to the market prepared with your small amount, and let's grow that into a bigger amount. And patience is key. You want to wait for them pullbacks. I hope Sundial Growers taught y'all that, and it's going to be a whole lot more to teach you the same thing. So let's look into it, y'all. We already did the Wall Street price target on this. We did that in the other video, so we ain't gonna cover that this time. But we're gonna go see what their pockets like, because they be hating on these small companies. I told y'all, they be hating on these small companies in public, but they be buying in private. So let's go see what the institutional holders doing. Increased positions, 27 holders. Decreased positions, 12. Held positions, 6. Total institutional shares, 45. Out of 45 holders, 12 decreased their position. New position, 16. Sold out position, 7. Their pocket's doing a little something different. Now, let's go ahead and, without further ado, let's go ahead and check out this chart. Sundial Growers, we opened up $1.87, $1.97. We dipped to $1.83. Then we shot off to $2.16. Pulled back, got to $2.26. Then we seen another pullback to $2.02. Now we look like we back on the rise. A week ago we were trading at $1.15. We got a nice upward trend, nice upward pattern, small pullbacks, no pullbacks, just straight up. And then we reach the top, that 340 right there. We really reached 390 in the pre-market, and we had that huge dip. A month ago was trading at 56 cents. 3 months ago, 24 cents. A year ago, 5 years ago, let's look at the chart. Once we break that 211 or that 226 that we hit today, where can we go? That 226 right here. Let's go back. Where can we go? Where can we possibly go? We break that 226. We break 226, we can get to 252. And once we get to 252, we can go straight to $290, $3 plus. and 346 will be our next breakout point to take us to $4 land. Once we get to 346, we can see 4 and above. And you already know how we do when we get to 5. When we get to $5 on the stock, that's when the Wall Street will be able to start buying in. Because I had a question. People asked me, like, why? Somebody was asking, like, do they wait to get to $5 to buy? Or what? What's up with this $5? And that's when the big boys get in. Let me explain that to y'all. Wall Street, these big companies, they're not really allowed. I mean, they can do it. People break rules all the time, but by restrictions and stuff, they're not allowed to buy these companies that's under $5. Once a company break under $5, they're required to sell their position. So once something break under 5, you probably see it tank from 5 to 3 because these people with millions had to get out of their position because now it's considered a penny stock. But once, for the vice versa, once the stock go over $5, get to $4.99, $5, that $5 mark, that's when it's a green light for Wall Street. They get the okay to buy, to purchase that company if they like the fundamental assets, the technical analysis. If they like all that, they like the company, they get the okay to buy it. And that'll make it, and when they buy, they got millions, they got way more money than retail investors. So that make the price go from $5 to 7, 7 to 10 in a quick amount of time. Okay, I just want to explain that to y'all. And also, before we end this video, I want to show y'all my position. I told y'all I was down. And I'm down. It's crazy because I was going to make a video and showing y'all how much I made in like 5-6 days. In 5-6 days, I was already up. Before this loss, I was up $8,000 in about 5 days. 5 days performance. Up 8K day trading. But now I basically done gave all that back. But I'm going to get it back because I'm holding. I'm not selling. I'm down $5,000. $5,100. And I'm smiling. I'm cheesing. I don't care. I mean, I care because it's just the fact when you comfortable and you content and you know what you're capable of. You know you got a plan. You know, that's why I try to tell you I always have a plan. You know this stuff. When you know this stuff, you gonna be fine. Anybody else will be probably trying to off themselves because they down 5K. You get what I'm saying? Or, I ain't gonna say off themselves, but they just having a bad day. And that used to be me. I used to have a little attitude when I was down in the market on Sunday. But now it's like, you feel me? It's nothing. You feel me? It ain't nothing, but y'all get what I'm saying. You already know. Y'all gonna get there. We gonna all get there. We eating together. So anyways, look at this position. We got 18K invested. And that's another thing. The more money you got invested, that's the more you can lose. And it's also the more you can make. So that's why I want y'all to treat y'all small accounts like they already big accounts, because you got this preparing you, because you so ready to get more money to trade with, but you can lose it just like that. So, you feel me? Be smart, be meticulous, never go all in. 18K invested. We got in, we was already in at $1.20, made money on the way up to like $3.90, and we sold, but then we got back in on a dip at $2.80, which we thought was a dip. You feel me? Like I didn't anticipate on the fall no more than $2.80 after the run, after it hit $4. It hit $4. And that was so close to 5. And you know what happened after 5? It could easily double. So I didn't expect it to do that. But you always got to be prepared, not surprised. That's why I got more capital, more firepower. Like I always tell y'all, I got more firepower to hit this thing in the head. I could have loaded up more on $1.80, but I'm thinking in my head like, no, I'm all the way in. I'm balls deep. So I ain't adding nothing. I ain't adding nothing until this thing hit 60 cents, 60, 75 cents a share. I go all the way in. You feel what I'm saying? So that's how you got to think. I always say that firepower for to add more shares to bring the average cost down, because it helps. So that's all I got for y'all in this video today. I hope y'all like that update, that prediction. If this type of content you like stock update, stock prediction, you want to be in the hottest plays, you right where you need to be, you found the right place, consider joining the family. You already know. It's your boy B Hayes. Don't forget to like, comment, and we out. God bless y'all.